Hello investors, welcome to Simpli Stocks. It has been about 3 to 4 months since the tariffs were implemented by the US. Since then, many businesses, especially textile companies and other exporters to the US, have underperformed significantly. However, amidst this volatility, there is a very interesting export business that has not only remained unaffected by Trump's tariffs but has actually benefited from them. Despite the trade barriers, this company's sales growth has remained steady. Even more interesting is that these tariffs are leading to margin expansion for them. So in today's video, we will study this unique business by the name of Goldiam International. We will explore their unique business model that sets them apart from other exporters. But yes, as a standard disclaimer, this video is not a buy or sell recommendation on Goldiam. Please keep that in mind. With that, let's get started. First, let us understand what Goldiam International actually does. So, Goldiam is in the business of lab-grown diamond or LGD jewelry. They manufacture LGD jewelry and export it to retailers in the US. Now, what exactly are lab-grown diamonds? So, as you know, there are natural diamonds which are mined, but then there are also the ones which are grown in labs. Because as the name suggests, lab-grown diamonds are created artificially in labs, but they are just as shiny, durable and strong as natural diamonds. The biggest difference is in the price. Where a natural diamond might cost you 3.5 lakh rupees, an LGD of the same carat will cost you only 50 to 75,000 rupees. So you can see how massive the price gap is. And while LGD trend is still catching up in India, adoption in the USA has already skyrocketed. Today, roughly 50-60% of wedding rings in the US have LGDs. And slowly, we are seeing this trend arrive in India too. Many new startups and private players like Jiva and Limelight are expanding rapidly in India and are opening new stores specifically for LGD jewelry. Now, a humble request. If you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Returning to our discussion, now roughly 90% of Goldiam sales come from exporting jewelry to the USA. They have also started opening stores in India. Currently, they have 11 stores and they plan to open 50 to 65 more stores in the next 12 to 18 months, for which they recently raised a funding of around 202 CR. Now, because the USA is still their biggest market, the stock saw a sharp correction when Trump announced the tariffs, as investors feared the business would get affected severely. However, management has handled tariff situation quite well, actually brilliantly, I will say. They have started doing gold casting in the USA itself. Previously, the company did gold casting and polishing of jewelry piece in India before exporting. Now, what they have done is that they have changed their supply chain in a way that firstly, they do the initial gold casting in the USA. These pieces are then sent to India for diamond setting, polishing and finishing, and then are shipped back to the USA for sale. So this allows the product to be classified as a US origin product, effectively bypassing the tariffs. So this way the management has dealt smartly with the tariffs. That's why you can see that overall the business has grown between April to September. Sales grew by 41% year on year and profits went up by 47%. Plus, interestingly, these tariffs have actually led to margin expansion. When Goldiam shifted to the US casting model, their costs initially rose. So they communicated this to their clients in the US and they told them that they will have to increase the rates. And these higher rates have actually improved their overall margins. What started as a problem became an opportunity, and management has stated that even if tariffs are now removed in the future, they will continue with this US casting model. So despite the macroeconomic volatility, the company's results have been strong, but due to the US tariffs, market correction and some other factors too, market sentiment has remained negative for Goldiam and the stock has been underperforming for over a year now. Currently, this business trades at a PE of 30 and a PV ratio of 4. As they open new stores in India, their retail presence will also increase, and its investors may benefit from the premium valuation which is typically given to retail businesses. Moving forward, according to me, though a key risk that is emerging in this segment, which I also mentioned earlier, the LGD segment in India is taking off. So new players are entering and supply is increasing and competition is also heating up. In any good analysis, you don't just look at the demand side, but you must also look at the supply side, that how many companies are entering and expanding in the market. Because when too many players enter a market, margins often take a hit because competition goes up. Many LED startups have got funding recently. There is a player in the private market by the name of Limelight, which even plans to double its store count to 100 this year. So this is becoming a key risk on this. Goldiam's management says that Goldiam is the only LGD player in the listed space in India. They have been supplying LGD jewelry to the USA on such a large scale before as well. So they have their own manufacturing, and LGDs they source from the outside. They get a cost advantage because of their such a large scale. So they are able to source diamonds very cheaply in bulk, and then they are able to pass on the same low cost to their customers. So the company will always have a price advantage over the competition because of the scale. The second benefit they are getting is from their corporate backing. Being a listed company with a strong lineage, Goldiam has been in the market for a long time now. So they are opening their stores across the country now. So they are getting an edge over the startups while dealing with the property owners there. Because after the fall of Byju's and the likes, the trust of the people in the startups has come down in India. So their mall owners and real estate companies have more preference for giving stores to reputed names which have a history. And yes, one more risk that I feel will be here 3 to 4 years from now is that when these startups, new startups, start getting listed in the market, then valuation premium that Goldiam is getting for being the only listed LGD player will end, because more options will come for investors, which we also call paper supply. So that paper supply will increase. So after 3 to 4 years, Goldiam will not be able to get that scarcity premium. So if you are bullish regarding the lab grown theme in India, then you can definitely study Goldiam independently once. But yes, along with that, you have to keep these risks in mind that right now growth is good, the market is taking shape, but from an oversupply and competitive perspective, slowdown will come or can come in their sales growth and margins. That's why you cannot be very bullish regarding Goldiam. But overall, we have seen how fast the lab-grown diamond market has grown in the USA, and we can expect the same thing in India too. And at the end, I will ask you again to please like this video, and yes, also subscribe to our channel just in case you did not do it earlier. Your support helps us to bring high quality analysis like this every week. So I will see you in the next video. Happy investing.